Hey traders, I want to go over a question that I received yesterday. Simply, the trader said, Lance, I want to make 5% plus a week. I don't have time to day trade. I don't have time to sit on the computer all day long. I don't want to trade penny stocks or biotech stocks, and I don't want to get directional trading the S&P or the QQQ. So what can you do? Step number one, look to sell premium. So we're going to look to sell premium. That's selling options with high implied volatility. So we want number two, high IV. And we don't want to single this out just to earnings. There's some stocks out there, like I have Roku on my chart, and we have a free study on every platform. It's called implied volatility. Just type in IMP, it will pop up on your studies tab here. I'll pull it up right here. IMP, let's erase this. IMP, implied volatility, you double click it, it gets added to your lower study. Here, we'll do it right one more time. Boom, boom, perfect. And we'll make it nice and big. So Roku has very high implied volatility. It's at 90%, that's massive. Very high implied volatility here in Roku. Usually a stock will have high implied volatility around an earnings event because that earnings is one big question mark. So the market makers jack up the volatility, making the options expensive. If you're an option seller, you love it because you're getting a lot of juice in those options to sell. Another stock with high implied volatility would be a name like, oh, you guessed it, Tesla. Tesla has very high implied volatility. Another name, a Nvidia. These stocks move intraday massively, and that's what we want to see. High implied volatility. So let's go back to Roku, shall we? Here we are in Roku, very high implied volatility. Listen, I don't want to get too directional. Anything can happen in the stock market. Just like the email said, they don't want to get directional. So what you can do is look at neutral strategies, okay? Where you don't have to pick market tops or bottoms or get all fancy with trading. So when I'm looking at options to sell, I'm going to look at what the market makers are implying. So you can do this by adding the at-the-money calls and the at-the-money puts together, okay? So here we have in Roku, the stock's nearly at 134. The at-the-money calls are $6. The at-the-money puts are $12. So they're looking basically around a $12 move between next week. These options expire, again, October 25th. So they have, what's today, Wednesday, they have about 8 trading days left in them. Very short dated. In fact, you can actually go to the at-the-money straddle on your platform to give you even a little easier to look at. You can go to at-the-money straddle, look at the 134s, and here it is right at 12 bucks just about. So what you can do is take that $12 and look to sell options right at that $12 point from where the stock is. So I'll go back to my chart. And at $12 lower here in Roku, that would give me, with the stock at 134, about 124, okay? So I am gonna look, and we can do an iron condor both ways, but we're just gonna make it easy. We're gonna look to sell the 124 puts. They're about 221. Now, I never like selling naked options, so naked calls or naked puts, because what if Roku over the weekend announces negative news. Let's say they got hacked, the platform shut down, and the stock drops, 50 bucks. Probably not gonna happen, but if you sell naked options, you're gonna blow out your account. So what we can do is buy the 123 puts, a little bit of insurance. So we call that a bull put credit spread. So we're gonna collect about 25 cents on this trade. So let's analyze it. Here we are. For next week, the October 25th options, we are collecting 25 cents or 25 bucks per one contract. That is our max gain, okay? That's our max gain. Therefore, with a $1 wide spread, our max loss is gonna be 75 bucks. Okay, our max loss is obviously more than our max reward, but we have a very high probability of this trade getting to max value of 25 bucks. In other words, it's a very safe, high probability trade. We can actually analyze this in our platform here and say, hey, what is the percentage that Roku This bull put credit spread, we'll write it out really quick here. So we're looking at a bull put credit spread. So you're collecting a credit, which is great because you don't have to management. It can actually expire worthless. You don't even have to touch it. So if you're busy, you gotta love that. There is about an 82% chance that this trade expires worthless. So we get our max value of 25 bucks per contract, and about an 18% chance that we're gonna lose our entire position, or we're gonna lose 75 bucks. So in my opinion, that's a very good high probability risk versus reward setup. We're risking 75 to make 25, but we have an 82% win ratio for this trade to expire at max value. We're gonna look to sell premium week in and week out. We can do bull put credit spreads, we could do iron condors, we could do bear call spreads as credits, and collect that premium in your account week in and week out. It's great if you're busy and you don't have time to sit in front of the computer every day. Let me know what your favorite name is to trade. Collect that weekly option premium in. Lance with the Future of Wealth. Happy trading.